late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, arena so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. So today we're going to jump back into the crypto side of things. We do have some advancements going on in the markets right now, kind of taking a big dump. Now, we did have the stock markets crashing last week. They're down about 15% or more off their highs, depending on the index that we're talking about. So we did get a lot of people over the weekend. We saw Bitcoin showing some temporary relative strength in regards to the other markets. So we saw Bitcoin holding up pretty well, actually, for that day for such a dump in the stock market. You know, we saw the SPY down 5%, the IWM down 6%. So to see Bitcoin actually up on that day, a lot of people were getting a little overly bullish, in my opinion. That being said, obviously that correlation to traditional tech stocks is a lot higher than it ever has been in its history. So 1 or 2 days of price action is not enough for me to be really calling that a trend or saying that, oh yeah, Bitcoin's decoupling from traditional markets, that strength is going to continue. We only saw that for a couple days, and what we're seeing now, lots of the times, like we do during the weekends, we'll get a pump up during the weekend and ultimately just dumping out, giving up all those gains, if not more, before the market opens on Monday. That's exactly what we saw. So we're going to jump into the charts and take a look over here. So this is what I'm looking at initially. What we see here is I just have these moving averages. I'll get rid of them just to clean this chart up a little bit here. But we do see essentially what I have is the NASDAQ in the red here overlaid on top of Bitcoin. So what we saw right here, we saw the NASDAQ dumping. So right from here, it just dumped all the way down. It's pretty much a straight down move here. We saw Bitcoin right in through here, actually just gaining a little bit of strength in terms of that relative pair. That being said, that's when everybody started talking about that correlation breaking. If we look at the high time frame correlation, it really is just as correlated as it's ever been in its history. We need to continue paying attention to that. Bitcoin continues to be treated like a tech stock because it's so volatile. So again, I talk about it having those characteristics of fundamental characteristics of a digital gold. That being said, the market is not treating it as a digital gold asset right now. It's being treated like a tech stock. That's why we are also selling off, following the path of the NASDAQ. That being said, we're holding these lows for now. So we'll clean up the chart. We'll take a little look here. We're going to see if there's some opportunities and just kind of see what it looks like from a macro perspective here. So we'll start pulling some of our indicators out here. We're going to take a look at the Gaussian channel here. So this is a kind of trend-based momentum indicator. You can see when we're in an uptrend, this channel is green. And then when we go into a downtrend, we go into this red channel right here. And you see price stuck underneath it. So the Gaussian channel is red, signaling we're in that downtrend on the daily chart. We can flip to the weekly and see still green on the weekly, so it hasn't quite flipped to that red structure. As soon as it flips red on the weekly chart, that has actually marked the prior market cycle tops. But you can also see by the time it flips red here on the weekly, we've already experienced a lot of the downside. Same thing through here. By the time we flipped red, you know, we already experienced the majority of that downside. So this indicator, it is important to note on the lower time frame, we flipped red. So that is that signal that we are in for that downwards price action, and just stuck under here under the Gaussian channel isn't the best look right here. We can go back to the prior cycle. So look at this. Look at these two major corrections, both dropping below that Gaussian channel on the daily chart, flipping red, consolidating underneath. Right here, we were able to get back up above and get a secondary relief rally here. I'm not sure if we're going to actually get that rally here or if it's going to be similar where we're going to get another higher high. You know, it's really going to depend going forward what happens with the traditional markets. If the stock market continues bleeding, I don't expect Bitcoin to outperform it. It just doesn't really make sense to me that it's being treated as a tech stock, yet we expect it to outperform when tech stocks are selling off. So that makes no sense. That's not really a theory that I adhere to. I'm going to get rid of that. We'll take a look at our moving averages here. look at our Lux Algo order blocks. We'll take a look at our Bitcoin bull market support band, and then we'll see what we're looking at here. So pretty much we have our Bitcoin bull market support band with that bearish confirmed cross, similar to what we saw over here. So we do have that. That's an issue that we're taking with this cycle. We see that our death cross is just really, it's pretty much occurring. You know, guaranteed, I think it's going to happen. I don't think there's any fighting it right here. So now what we need to see is how price reacts underneath these moving averages. What we saw in the prior cycle was kind of that relief rally up to the 200-day moving average. So right here, look at this big dump out. We got our death cross. We had a little bounce up. Ultimately, though, when we found our low, look at this, we went back up and retested our 200-day moving average. So that's kind of the relief rally that I'm talking about. Even if we don't get another higher high in the market, we could get a pretty solid rally. We can look at this right here. So we go from this low to this high. That was a 47% move. So if you caught anywhere in this move, maybe you caught on the higher low, you're still looking at a 30 to 40% move in a downtrend. That's not like any returns to kind of be afraid of. You know, you should be happy with a 40% move, especially if you're able to kind of get in, get those profits, and avoid the rest of the downtrend. So what we want to see here, you know, we might start to see this death cross really start to play out. We get the blue moving average curling up like this, and we start to get our orange 50-day moving average curling like this. So we might see price from here just kind of go up into the 200-day moving average, just like it did last cycle. So what I want to do is I'm building a swing position. So I'm not interested in really entering in any major size or accumulating a substantial amount right now because of this price action. We're still stuck under key moving averages. We're still stuck under resistance. We're in downtrending price action. We haven't confirmed that to the upside. So for now, it's not worth it for me to take the additional risk of buying heavily into the market. So what I'm going to do when I talk about swing trade positions, that means I'm just going to start inching into a position essentially. What I want to do is dollar cost average my way in. I'm going to have a stop loss below these support levels in through here, because if we do break this support, we kind of lose a lot of structure for the market. We can also see that there is this down sloping trend line support kind of coinciding over here. So basically aiming for down here is going to be the area that I might want to start accumulating more spot Bitcoin. But right here for a potential swing bounce trade, you know, I'm definitely interested in kind of building a position. So I've taken my initial entry right around $80,000. I've kind of averaged it down a little bit. So right now the current average price on that position is about $79,700. If we drop a little bit more, I'll continue dollar cost averaging, and I'm going to put my stop loss kind of around $75,000 here. And then if we break below this support, we're continuing in that downtrend structure that tells me get out with that minimal loss, you know. So pretty much in all this downwards price action, we've been swing trading every time we come to this range. So we come down to the low 80s, high 70s, we pick up a little bit, and then we ride it up to the mid 80s or 90s, unload it, bank those profits. So we're up about 25% unleveraged on our swing positions while we're in a downtrend. So that's what I talk about. Even in a downtrend, there is opportunities to be making money, but you have to be disciplined and you have to be able to protect those positions and not take on excessive risk. That's why when I talk about swing positions, we just kind of inch into them, build them the same way that we build our other positions, and then we have stop losses protecting it, and we take profits a little bit more conservatively. So I'll get rid of some of these drawings and I'll show you pretty much what I'm looking at here in terms of a swing position. So if we start building it here kind of right around the current price, we've got our stop loss below support here, and then what I'm aiming for is we have this sell order block here, and we've also got a sell order block up here. So 92,000 roughly is going to be kind of my first target in terms of profit taking. There is a kind of a liquidity gap that we could take out upwards in kind of around 92,000. It's also a lot of resistance. You can see it acted as support all through here and then resistance here. So I think we'd come up and probably get rejected around 92,000, but looking to take profits on that move and then potentially look at that entrance on another subsequent higher low, continuing that move to the upside, and maybe we take out some of the liquidity up here. But that being said, I just want to remain kind of open and transparent with you guys. So I have started a swing position on Bitcoin, you know, nothing too aggressive, but I have entered that position. I will continue to dollar cost average it down to about 77,000 is what I'm looking at, and then with that stop loss currently around 75,000 for now. And then if we start to get that bounce and moving back up, we can trail our stop loss up as things kind of play out here. But that's essentially all I'm aiming for Bitcoin right now. So my accumulation plan, essentially build swing positions during build swing positions at key levels of support. So right now we can see we're at a pretty key level of support. We can take our Fibonacci retracement from this swing low to this swing high. Look at that, we came back, tagged that, pretty much tagged that 786, and so also coinciding with a little bit of horizontal support in through there. So we're at a high level of support. It makes sense to me at least to be starting to build a bit of a swing position. I'm just going to continue adding to it. I do think we'll eventually get that bounce. So we're going to see going into tomorrow what the SPY can do. We're getting kind of mixed reactions from the different countries that have been tariffed. So some retaliations, some negotiations, some countries backing down. You know, it's going to be interesting what happens tomorrow in the traditional stock markets. If we do get a little bit of a relief bounce in the stock markets, I expect that to translate into Bitcoin and crypto, and that's why I am kind of taking that little bit of a hedge position here. I'm still keeping a lot of cash on the sidelines aimed for accumulating lower targets, but I'm also willing to try and take a little bit of opportunity on kind of the shorter term plays, looking for a little bit of a bounce relief play. That's where a lot of people might look to be de-risking some of their positions. We've already de-risked our positions much higher. Now we're just looking to take advantage of little bounce swing opportunities until we get that technical confirmation on the higher time frame, in which case we can start entering the market on a larger size, a larger basis. That's when I talk about that spot accumulation. Really focusing the majority of your capital for when we have that confirmed trend, because we could ultimately just break down from here and then we end up aiming for those lower targets. I do have a cycle low potential target of $35 to about $51,000 per Bitcoin. That's just based on the traditional kind of retracements from prior cycles as well, so take it with a grain of salt. But that's my plan for Bitcoin, starting that swing position, building it down a little bit lower, ultimately stop loss protecting it, and getting ready to take advantage of lower targets for accumulations if they do arise. I'll continue to keep you guys updated on that. We'll flip over to Bitcoin dominance here, which continues on its uptrend. That's why I haven't really been too interested in Ethereum or altcoins, because we've seen Bitcoin dominance just continuing up. There's a lot of resistance up in through here. We do have a potential target of up to 66%. We'll see if it gets there. It's basically above all major resistance here right now and continuing that uptrend structure. So with Bitcoin dominance looking really good here. Ethereum just getting knocked down. Look at that, wicked down to that 786 level, acting as support. That's what I said. So if you're dollar cost averaging Ethereum, you know, I don't, and we look, let's just look at the prior cycle here. From the previous cycle, from low to high, we came back to that 786 target and we're already there. So to me personally, from a long-term high time frame perspective, it's not the worst time to potentially be DCAing into Ethereum. That being said, you have to recognize that falling knife price action. That's what we saw over here. You know, I would rather wait for us to bottom out like this, and then you see even here, you know, a lot of people probably FOMOing into this move. I'll zoom in and we can just, I'll show you real quick. So basically Ethereum coming down, falling knife status, we get back above our 50-day. That's probably a pretty aggressive move if we actually pull the percent of it. You know, you're looking at 127% move. That's going to cause a lot of FOMO in the markets, but look what happened afterwards. We ultimately just came back down, retested kind of this low range here, this 786. This is where we bottomed, and this is where kind of the momentum really started to change. If you look at the difference in entry from here to here, it's really minimal, you know, 20% difference, guys. I'm not here to pinch pennies and take on that risk of buying a falling knife. I'm here to capitalize on these macro trends. So I'm not here for this move right there. I'm here for this move right here. And that's what I want to position myself in aggressively, but I'm not going to do it until I have technical confirmation because there's too much risk. So we can treat this kind of similarly to how we're treating Bitcoin right now. That being said, in terms of a swing position, I'm just more interested in putting my money into Bitcoin right now. Ethereum is just, although I don't believe that a lot of people say Ethereum is dead, blah, blah, blah. We've heard that a million times in its history. It's always going to be around, I think, at least for the foreseeable future. That being said, it's not technically bottomed. We're going to wait for more confirmation, and then we're going to look for our entries there. Until then, no sense taking additional risk in Ethereum outside of Bitcoin when dominance continues in an uptrend. ETH, Bitcoin now at new lows. So I said watch this zone right through here. We've already lost that level of support. This is the last level of support down here at 0.016. We do have a little bit of buy order blocks in through here. But Ethereum Bitcoin continues in its downtrend, just bleeding and bleeding and bleeding. Not worth the risk in my opinion. Flipping over to total 3. Look at that. Look at that. We'll come back and tag the lows. But we need to hold here. Otherwise, that 786 comes back into play. And that's actually quite a substantial drop from the current price. That's down another 14%. So total 3 alts really need to do a little bit of work here. Others dominance coming back down to its buy order block. And kind of, yeah, that bearish price action breakdown. So nothing really crazy to write home about there. Looking at Solana quickly, we also see it breaking the lows here. So that's interesting price action. Solana has lost its lows, so we'll see if it can bottom out here. We're basically going to see the same thing across the board. Alts just doing really poorly. That's why we didn't take any excessive risk. And this is not what we want to see, guys. For your altcoins to outperform, you don't want to see USDT dominance on an uptrend like this. You see we're above the 200-week moving average. We're above the 50 and 200-day moving average in uptrend structure. We'll take a look at our momentum indicators. Bullish setup across the board for USDT dominance. That means pressure on altcoins, pressure on Ethereum. So we'll continue just following along. We need to pay attention to all these, but for now, there's not a lot going on in the markets. We continue bleeding. There is some opportunities to take swing trades or potentially add DCA buys. Just remember, if you're buying at the current prices, we don't know what's going to happen in the coming days in terms of stock market volatility. So I'm going to start with this swing position on Bitcoin. I feel comfortable. I don't mind holding Bitcoin a lot longer. It's less volatile, so I'm able to kind of utilize a little bit of leverage there, kind of amplify the returns. But that being said, ultimately waiting for more clarity from the markets over the coming days. We'll see what happens. There could also be opportunities in the macro side of things. So I'm going to take a look over here at the SPY, and we see that massive drop. We've come into our Fibonacci support zone. So this is a zone that I was previously talking about, a prior correction. What we saw over here from 2020 up to 2022, we did also get a similar 0.5 Fibonacci correction. So in terms of adding into your SPY, if you're a DCAer, not a bad time to be dollar cost averaging, guys. Like, we're 15% or more off the highs, 17% off the highs actually by the end of the day of closing on Friday. So traditionally, 10 to 15% corrections in the stock market are good buying opportunities. That being said, recessionary drops are closer to 20 to 30%. So if we are entering right now, just be ready that we could go lower. We could tag these lower support zones. We might even come back to that 200-week moving average that we did over here. And that would be a really good opportunity to be buying the SPY in my opinion. Same thing with the QQQ, so NASDAQ. Just looking at these, they're still falling knife status, but I expect a little bit of a relief bounce at some point. I think we've experienced more of the near-term downside than less. So I think at least in the near term, we could hopefully find a bottom this week. Even if it's just a local bottom, get a little bit of a bounce play, and then we'll see where we can go from there. So SPY, NASDAQ, looking a little bit interesting here. I think I might also do a similar thing. I haven't decided for sure, and I'll keep you posted this week. But I'm looking at a potential 2 to 3x leveraged SPY ETF. So that's trying to take advantage of that bounce play and just entering in small size. Not real. Again, same thing as Bitcoin. Wait for confirmation on the chart before getting aggressive. But there could be opportunities for a little swing trade, or as I said, just dollar cost averaging, but ready ready for potential further downside. And then kind of across the board, we just see all that weakness. So nothing really to write home about. Too much volatility and uncertainty in the world right now. We need to see what happens with markets this week. Hopefully further de-escalation of the tariffs and the trade war, and then we can start to find a little bit of a bottom and get a relief bounce and see some of these swing trades start to move to the upside. That's the ideal scenario. Otherwise, worst case scenario, it's going to be a bloody Monday, and we'll just have to deal with it and kind of assess as we go. Again, we're not overly risked right now. We're comfortable with what we have. We're solid. We've got a good cash position built up. We have some hedge trades running. We've got some swing trades. So we're positioned kind of for any outcome, and that's what you want to do as an investor. Just positioning yourself, not getting emotional. People that are scared right now, they kind of don't really follow the history of the stock market, pretty much during recessions, by the time that everybody agrees that we're in a recession, we've pretty much felt the majority of the pain in the stock market, at least, because stock markets are forward looking. They're going to price it in a lot sooner. So as soon as the rest of the economy and as soon as everyone on the news starts talking about it, a lot of the times we have experienced the majority of that downside. A 17% correction in the SPY is nothing to scoff at, and I do think there is opportunities to be adding on a longer term basis. So just keep that in mind. You know, not a bad time to be dollar cost averaging. Just make sure that you're positioned to take advantage of lower targets. Keep working hard, build that cash position, and then get ready to take advantage of the opportunities as they come. So if you learned something new, if you like the content, please share, subscribe, and like. It all means the world to me, and I'll see you guys in the next one.